Welcome to the Spokane housing market update. It's March 2024. In this video, I'm going to bring you the facts that you need to know about the national and local housing market without any of the nonsense fluff or clickbait headlines. And this month's update is important because I have some really interesting news to bring you about national housing inventory. My name is Phil Wells. I'm a Spokane real estate agent that takes the time to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to start by getting a national overview of what's been happening. We're going to look at pending home sales, we'll look at mortgage rates, mortgage application rates, as well as median home prices. We'll then compare and contrast what's been happening nationally to what's happening here locally, before looking at some news articles that have stood out to me this month. Just a quick note before we get going, go and follow me on Instagram if you haven't already. That's where I'm most active and that's where you can interact with me most readily. Looking first at national pending home sales, which detail activity from January. Contract signings were down 4.9% on a month-on-month basis in January, and the figure that we really care about, the year-over-year figure, shows contract signings were down 8.8%. That certainly knocked the wind out of the sails of the upward trend we'd been seeing over the past few months, but that's only 1 month of data and it doesn't change that trend just yet. Here's what the National Association of Realtors chief economist had to say about January's pending home sales. The job market is solid and the country's total wealth reached a record high due to the stock market and home price gains. This combination of economic conditions is favorable for home buying. However, consumers are showing extra sensitivity to changes in mortgage rates in the current cycle, and that's impacting home sales. So affordability concerned dampened home sales in January. We will look at affordability in a little bit more detail when we look at national median home prices. Let's move on and look at mortgage rates. Obviously, the majority of people buy a home with a mortgage, so to keep an eye on how much people are paying for those mortgages is very important. Sticking with January for a second so we can really analyze that period in time, mortgage rates at the start of January were 6.72%, and by the end of January, they were at 6.75%. As you can see from this graph here, with the exception of that short-lived drop-off at the end of the month, rates were generally climbing throughout the month of January, which decreases affordability and goes some way to explaining the pullback we saw in terms of pending home sales in January. Rates have since climbed to where they are today at 6.92%, so we might expect to see more of a pullback in terms of pending home sales when February's data comes out. But let's actually check on what's been happening recently by looking at mortgage application rates. So mortgage application rates, this is exactly what it sounds like. We want to know how many people are actually applying for mortgages. And the beauty of looking at these figures is that they're reported weekly, not with a 1 month delay like pending home sales. So we can get a really good up-to-date impression of what's happening. The last couple of weeks have seen mortgage applications increase 3.8% and most recently 9.8% on a week-on-week basis as the spring selling season really kicks off. I have sent more people to lenders to get pre-approved in the last month than in the previous 3 months before that combined. I've also encountered and heard of multiple offer situations on several new listings recently. Not great news if you're a prospective home buyer. Now let's move on and look at national median home prices. National median home prices in January were $402,000, which is up 5.1% on a year-over-year basis. Just keep that 5.1% price growth in your mind while I highlight this next point. Does it make sense to buy right now or wait until rates come back down? Let's analyze this further. Affordability is a major concern for home buyers right now, and rightfully so. Everything is more expensive than it was just a few years ago, not just home prices. According to this graph, the consensus is that mortgage rates will be around 6% by at the earliest Q4 of this year, and almost certainly by Q1 of 2025. So in around 1 year's time. Let's run some numbers on that really quickly. A $500,000 home with a 10% down payment at 7% interest today is going to cost you around $3,600 a month. Wait a year and factor in that 5.1% growth rate we just looked at, and you're buying that same home for $525,000 with a 6% mortgage and 10% down. The net result is that you're only saving yourself $150 a month. Yes, that's a saving, but you just spent $25,000 more on a home to achieve that $150 saving. And if you think in terms of the time it takes you to pay off that extra $25,000, I did the math and it's 14 years to break even on that deal. Actually make that 15 years because you waited that extra year to pull the trigger. It shouldn't be overlooked either that the person that bought when rates were 7% is now sat on $25,000 worth of equity too. The math is clear, it doesn't pay to wait. Competition is coming back as we've seen with mortgage application rates. While rates are 7%, just imagine what the competition is going to be like when rates are 5% or 6%. So let's summarize the national picture as we see it right now so we have something to compare our local market to. Pending home sales pulled back in January as mortgage rates increased. Mortgage rates are currently around 7%, but the consensus is that they will break through that 6% barrier within the next 12 months or so. And we have compelling evidence that there are buyers waiting in the wings, as evidenced by the uptick in recent mortgage application rates, as the spring selling season really kicks off. And of course, as ever, home prices continue to climb and they show no signs of slowing down. So if you're a buyer right now thinking you'll just sit and wait until you've got a 5 handle on your mortgage rate and then you'll pounce, everyone else is having that same idea, and as we just outlined before, it really doesn't pay to wait. In fact, the opposite is true. Yes, it sucks to have to compete when mortgages are so expensive and you don't feel like you should have to compete, but take it from someone who was there when mortgage rates were 3% and we were offering $50,000 to $100,000 over list price just to get an offer accepted. When it comes to real estate, there is no perfect scenario. You really have to pick your struggle, and buying with higher interest rates right now and lower competition is the struggle I would personally pick. If you're a seller, then know that competition is coming back to the market. You can expect competition to steadily increase from here as mortgage rates begin to decline. Don't expect a line around the block just yet, but know that it is possible to sell your home and low inventory is working in your favor to keep prices strong. Let's look at the Spokane market and see how it compares to that national picture we just painted. Sales were up 11.6% on a year-over-year basis, which is far ahead of national sales, which declined 8.8% most recently. It also represents a major reversal from last month, where we saw a 13% year-over-year sales decline. Median home prices are up 6.7% on a year-over-year basis to $400,000, so a more pronounced growth rate than what's happening nationally there in Spokane. Inventory remains very low and is at a 2.1 month supply. This low inventory increases competition among buyers and continues to work in sellers' favor. It also means buyers are going to have to shop for a little longer to find the right place in most cases. New listings are up 18.9% on a year-over-year basis, which is great to see. We need more inventory. You can see days on market of 14 days. That is down substantially from where it was only 2 months ago, where it was 28 days on market. Those numbers don't lie. Homes are selling faster and they're selling for more as we head into spring. So overall, Spokane is mirroring the rest of the nation as it so often tends to do. If you're a seller who has been hibernating throughout winter, waiting for those warmer spring selling months, well, spring is here. Give me a call today to see what you can net by selling your home with me. Now I wanted to touch on a few news articles that have stood out to me this month. As always, if you want to read these articles in more detail, the links will be in the description to this video. The first piece of news we're going to look at is from the ever-transparent Federal Reserve. They now seem to be going back towards the idea that inflation needs to be at or close to 2% before they cut rates. There was, until recently, very much a mission accomplished message in regards to inflation coming from federal bureaucrats and financial pundits. So much so that many pundits were predicting 6 rate cuts in 2024 alone. Now though, Jerome Powell is quoted as saying, "We're going to take our time and do it right." So a continued major pullback there from the Federal Reserve when it comes to the prospect of cutting interest rates. The idea of getting inflation under control is a great idea, but with inflation currently at 3.1%, is it really necessary to hold rates this high for so much longer? Let me know what you think in the comments below. And now, as mentioned at the start of this video, we're going to discuss the major news that came out in relation to inventory. Firstly, this article caught my eye as it highlights one of the unexpected consequences of jacking up interest rates so fast, the so-called lock-in effect. What happens is that 2.5% mortgage rate secured against a house becomes more valuable to the owner than the home itself. Selling that home would mean trading your real estate golden ticket for a 5, 6, or even 7% interest rate, which makes no financial sense and means you're effectively locked in to your home by the mortgage. The bigger picture is that the market will remain practically frozen. The biggest constraint on activity in recent years has been the lack of available homes for sale due to mortgage rate lock-in. We don't expect that to change much. That means then that home builders are really going to have to step up to ward off this pending inventory crisis. Well, I don't have good news for you there either, because unfortunately, housing starts unexpectedly plummeted to 2022 levels. A housing start is an application to build a home and is an indicator of future inventory. So how bad is this coming inventory crisis? Well, a recent study from Realtor.com shows this. We are now 7.2 million homes short across the country. This is the top story in real estate right now. Forget interest rates, they are just a current shiny object. They'll go away as an issue before too long. Now for just a little bit of inland Northwest specific news. Spokane will be hosting its first ever professional soccer game in the all-new One Spokane Stadium. Now, I don't care for soccer, and it's okay if you don't either. But soccer is big business. I grew up in Manchester in the United Kingdom, which is home to two of the largest soccer clubs in the world, and I can tell you from first-hand experience the massive economic impact that successful teams can have on a city. It just goes to show that Spokane and the inland Northwest is going from strength to strength and has a very bright future ahead of it. That's it for this video. I hope you gained from the video. If you did, please like and subscribe. That really does help me out. And if you are looking at buying or selling in the Spokane area, feel free to reach out to me. Give me a call, shoot me a text, send me an email. My details will be in the description to this video. Like I said, my name is Phil Wells, and thank you for watching.